Hi, I'm Ryan with GoBrent Real Estate. And if you're a real estate investor, whether you're serious or just a beginner, you've probably heard of the 1031 exchange. This is a method of selling one investment property and using the proceeds to purchase another property immediately in order to defer capital gains taxes on the sale. Now, you may have also heard that it can be a little complicated and that you really should use professional help. And how it works is that you place the proceeds of the sale with a qualified intermediary who is then able to purchase the replacement property for you on your behalf. And in the most typical scenario of the 1031 exchange, you usually have about 45 days to identify the replacement properties that you want to purchase and up to 180 days to actually close on the sale of those properties. So this is called a delayed exchange. Now, one of the drawbacks with this strategy is that the rules and timelines can be pretty cumbersome. Once you sell, the clock is ticking, and that's actually really the hardest part. Because especially in the market that we're in now, there's very low housing inventory. There's high prices, there's a lot of buyer demand and a lot of competition, and as a result, there are fewer good single-family investment opportunities available these days. And the multifamily space is actually very competitive as well, and has been for some years. That's why you could consider something called a reverse 1031 exchange. Now, I'm not giving a tax advice here, but a reverse 1031 exchange allows you to acquire a desirable investment property first and then to relinquish the one that you want to sell later. And you still get to take advantage of the deferred capital gains taxes on the properties that you sell. Now, of course, the main drawback here is that you actually need to have the funds available to acquire the property first, rather than relying on the sale proceeds of the property as in the delayed exchange. And if you need funding, it actually has to go through your intermediary, through your exchange accommodation title holder. But if you can get the financing, it is a great way to take your time in identifying and purchasing an investment property for a good deal that makes sense, and then to sell the property you want to relinquish when that makes sense in order to realize the benefits of the deferred capital gains. So this is just an idea. It's pretty tricky, so definitely talk to a qualified professional if you have questions. But I'm always available to talk about investment strategies for real estate with buyers, investors, and sellers. So please reach out if you have any questions. Thanks so much for your time, and I hope that you got some value from the idea that a reverse 1031 exchange exists. Take care.